We are live. Welcome, everyone. Thanks for showing up. Pop into the chat and talk to us. And if you're watching a replay, thank you for joining. So this week, for the first time, a public company has adopted Bitcoin as their primary treasury reserve asset. Today, we're going to talk about, what even is a treasury reserve asset and why this is a big deal for Bitcoin, that it's being used by companies like this. And we're going to talk about other firms and institutions that are putting significant amounts of funds into Bitcoin. So we have an awesome guest today to help us kind of break that down. We have Arthur Salzer, and we also have myself and Dave from MetaMesh. But why don't we kick it off to Arthur? Arthur, what do you do?
So what I do for a living is I'm a jack of all trades, master of none. I am the founder, CEO, and Chief Investment Officer of Northland Wealth Management, a Canadian multifamily office. We serve families coast to coast across Canada, a little bit of in Europe, so England, France, Belgium, the Caribbean, United States, and Latin America. And we help families manage their financial wealth. We call that the financial capital, and we also help families manage their human capital side as well.
Hold on. For the guests that maybe aren't as knowledgeable, what even is a family office?
Yeah, I was wondering. Yeah.
So that's the big joke. So there's a saying, once you've seen a family office, you've seen a family office. Each one is individual, just like the fingerprints on a person.
Okay.
A single family office, for the most part, is a corporation or partnership that a family puts together in order to make investments through.
Okay.
No more, no less than that. Northland is what is called a multifamily office. So we serve multiple families. In fact, we serve just over 100 families.
Okay.
We utilize the family's capital to make investments for them in a sophisticated way that mimics what pension funds would do or large single family offices would do. From a pricing standpoint, once you have, say, maybe $500 million, 500 million or more, it makes sense to begin to hire a team that you would employ on a day-to-day basis to help you make those investment decisions. But below those levels, there is a cost savings as well as increased access by using a commercial multifamily office or pooling your capital with other families as well.
So I guess kind of the question is, let's say, we're all hoping that Bitcoin hits 100K and we can all be like, hey there, Arthur, I would like to subscribe to your family office. But why would I go to a family office versus something like, TD Bank Wealth?
The challenge really is the open architecture platform. When you look at what the banks offer Canadians or the brokerages offer Canadians, or the mutual fund companies offer Canadians, they typically sell or manufacture their own products and deliver those to the families.
Okay,
we use what's
shilling their stuff is what it sounds like.
Exactly. Or if they can't find solutions third party, they might be adequate, but a lot of the people inside the firm don't want to take the career risk to put the time in and to discover new asset classes like Bitcoin. So for instance, Northland, since inception, we have been accessing some of the best private equity managers in the world. We were the original private investors in Shopify, for instance, at a $70 million valuation.
Wow. Okay.
Getting access, it's, 60 billion, 100 billion.
Yeah.
It's the largest company in Canada now by market capitalization. And we were there a decade ago.
A big.
Right. And I think we'll probably be there for Bitcoin as well. So there's a level of sophistication with it from family offices. And typically they will have specialists, or they should have specialists in the private markets, private real estate, debt, hedge funds, as well as the public marketplace.
So I want to touch back to those exact things that you mentioned, but I heard you say something. You mentioned the term career risk, and it made me want to circle right back to, the big story of the week, which is Microsystems buying Bitcoin. Do you think that it's kind of a similar situation where the career risk has been reduced for maybe CEOs or CFOs or people putting that forward, or is it kind of a different story? But I would love to hear, what your point of view is of them buying Bitcoin. So why don't we pull up, Dave, the big news story? So publicly traded business intelligence firm Microstrategy, what they did was they purchased 21,454 Bitcoin, which is a significant amount. It's 1% of Bitcoin supply. Oh, hi Celia, thanks for joining us. So they purchased a huge chunk of Bitcoin supply, about 250 US million dollars worth. And so what you as kind of an institutional investor, a sophisticated investor, what do you see or think of when you see that?
Well, I had a quick view. I wish I read Michael's book back in 2012 and his views on software as a service, on how cell phones were going to be the new supercomputers. Just so many right calls that he made in that book. Okay. And given where MicroStrategy sits in the technology ecosystem, I think that gave them an edge to be able to make that kind of decision to purchase Bitcoin and to use it as part of their balance sheet. Regular firms that aren't in that space, that don't have that expertise, that haven't been around tech for 20 years, I don't believe are yet likely to make that decision. I think as a new block of upcoming chief financial officers get hired at larger public firms, people that are probably now in their 30s, once they start hitting their 40s, which is probably the next cycle, the likelihood that not just tech firms, but other firms would start to add Bitcoin on their balance sheets as a treasury asset. But I still think it's probably 4 or 5 years away before it becomes more accepted practice.
So for those of us in the audience who get the basic idea of investment and why you would, if you were Bruce Wayne, for example, have a family office, a bat office.
And he does have a single family office. Yes, exactly.
Yeah. I would say so. So why would it be a big deal for my Alfred running my family office to recommend, set up, and then invest heavily in Bitcoin instead of whatever Wayne Enterprises normally?
I think Alfred's always the voice of reason and says, Bruce, don't do that. You're crazy. So it would probably be Bruce coming up with the idea. Maybe that'll be the new one. It'll be Batcoin instead, right? That'll be the new currency for Gotham, Batcoin instead of Bitcoin.
So why is it a big deal that Alfred would let me as Batman to do that?
Yeah.
Because Batman just does it anyhow. I think like the change that we saw, was it 2 weeks ago, 3 weeks ago, where the U.S. banking system are starting to allow banks to custody crypto. It was because there was a change in senior executive for that post. And somebody who I think he was from Coinbase originally, had that expertise and says, no, this makes sense. Let's let the banks get involved now. So that's how ideas change. You get people that are stuck in the mud. They're Luddites. They don't want to change, and it's the new generation that has seen something, experienced something, and they'll be the ones making those changes happen. It happens with politics. It'll happen with corporations as well. But I think it's a little early, and I think it'll probably be the next cycle where corporations will start to add to that picture. And that might be the impetus to take us from the 100,000 to the 500,000 or the 700,000, cross valuation from Bitcoin versus dollar.
So you're saying I should hold on to my Satoshis because eventually I'll be able to buy a car with them. Is that what you're saying?
More likely than not, yes.
I'm for it. We have a question in the chat, and it seems to be perhaps genuine, but a little sarcastic. But I'm going to ask it because as a reader, I actually don't fully understand every aspect of it, but I know what he's getting at, right? So Mr. Bitcoin here in the chat is asking, can you get qbtc.u, right, to issue new shares so I can buy in at the net asset value price?
From what I've heard, and I was on a call 2 weeks ago for the Casa Family Office call, and Fred Pye was on the call, so it's a public it's a public call that people can probably find a copy of. But they said that they're getting applied for changes with the regulator, and they do expect a daily issuance of QBTC at some point in time in the near future, and that will reduce the premium down.
What's the QBTC?
Sorry, let me just step back a little bit.
Yeah.
That's the Bitcoin Trust.
So at the beginning of this year, 3IQ, which is an asset manager in Canada, launched the Bitcoin Fund on the Toronto Stock Exchange, and that was a closed-end fund, so, as in you don't buy in Bitcoin daily. A certain amount of money is raised, and that is used to buy Bitcoin. And then what ends up happening is, because supply and demand, sometimes there was a bigger demand by people of the shares that were issued. So there might be a bit of a premium between what the actual Bitcoin price and the price of the of the assets that are held by the fund. So the question, was, could more shares be issued by the fund to kind of lower that premium down? And that actually, it's interesting, because we've seen this kind of premium, not just in Canada here with 3IQ's fund, but we've also seen the same premium at the Grayscale Trust. And that is a huge fund. Grayscale Trust has about $5.6 billion under management. And historically, we have seen this premium there. But do you want to talk a bit about the inflows that we've been seeing recently with Grayscale, Arthur? Just kind of what do you think this means? Do you think it's institutions buying?
I think you're starting to see pensions dip their toes in the water. How they allocate it. So, like at Northland, we allocated to Bitcoin. We have it under the bucket real assets. So real assets are comprised of real estate, private real estate, non-public stocks, things like gold, precious metals, and digital assets such as Bitcoin. And when we did our deep dive, we basically said Bitcoin is unique. It's one of a kind. It's a true store of value. And the other tokens, cryptos, whatever you want to classify them as, altcoins, we looked at them more as a VC expression, a venture capital expression, and that would go to a different bucket. But when you look at Yale came out with a paper, I think in 2018, 2017, on the diversification benefits of adding Bitcoin at a 1% allocation to a traditional 60-40 portfolio. There was a massive increase in Sharpe. There was a reduction or a maintenance in volatility, which means better return for risk. And I think a lot of pensions are starting to look at that. There was a great piece put out by Cambridge Associates 2 years back or a year and a half back on the addition of Bitcoin to portfolios, and I think that's starting to filter through the system now. And obviously, Grayscale is a way to look at it. The big changes, though, is with custodians like Fidelity Digital, with Gemini Trust, with Bakkt, obviously, which is owned by ICE, the owners of the New York Stock Exchange, ErisX, which firms like TD Bank and Castle Island Ventures are invested in. There's a lot of ways that institutional investors are going to be accessing this marketplace, not just Grayscale.
And do you think
sounds like some heavy hitters are starting to it sounds like you're saying that they started theoretically saying we should do it, and then people are starting to listen. Is that right? Some of this might be a little too fast for people who don't know, but it seems like we got people who know exactly what you're saying, so we don't want to break down everything too much. So yeah. So where do you think this is all heading? How will this change? How will this change Bitcoin and the crypto industry?
This is Bitcoin's going to become an accepted asset class under digital assets as a real asset for probably the majority of portfolios today. 10 years ago, Northland was investing in things like private credit, hedge funds, real estate, and we started making investments a year ago after a 2-year journey. And I think other investors are going to start doing the same due diligence or similar level.
Yeah.
And it's good. It's going to become an accepted asset class. It's just starting.
I would love to hear about your Bitcoin journey. For how does a family office get to that point? As a sophisticated investor, and you just said it took about 2 years. Like
it was 2 years. I personally did over 2,000 hours of study. My team did probably another 1,000 before we pulled the trigger, because there's career risk here. This is a nascent asset class for the financial services industry. Yes, it's been around 11 years. Yes, it's had almost 100% uptime, but it's nascent from an investment standpoint for the financial services industry. So it was back in 2017, and I was in Las Vegas at the Skybridge Alternative Conference that's put on by Anthony Scaramucci. It's called SALT. And the funny part is, SALT started in 2009. So Obama came out and said, those awful people on Wall Street and those hedge fund guys, no more junkets to Vegas.
Salty.
No more junkets to Vegas. We've had enough of this. And Anthony Scaramucci said, you know something? Being a Republican, I think we should have a big hedge fund conference and a junket to Vegas. And he started it in 2009. So he did exactly against what Obama was saying. And he put together a phenomenal event. Typically, a couple thousand people would show up, and they'd bring in big headline speakers. So there I was. They hadn't spoken about Bitcoin yet. It's 2017. I come off camera, and the servers come running up to me, and I'm there outside, and it's beautiful. And they said, "You must be somebody important because you came off camera." And I'm like, "Not really, but anyhow, what's your question?" And they said, "We want to buy Bitcoin and we want to put our life savings into it. What do you think?" And I went, "Okay, I haven't done any due diligence on this, so I really don't have an understanding of how it performs or acts or anything else." One of my friends that I know very well, who is a news anchor on Fox and a former hedge fund manager, he bought it at $100. It's now 2,000, and he's scaling out.
Okay.
Not selling it all, but he's selling some. He's taking profits. I said, that's what I know about Bitcoin. And to my surprise, from May 2017 to December 2017, Bitcoin went from $2,000 US equivalent to $20,000 US equivalent. It still went up 10 times after that fact. But I knew that when the help starts asking you for stock tips, you're in a bubble. But that did pique my interest. So we actually started a real deep dive beginning in 2018 into the subject matter. Yeah. And it was watching all the Andreas videos and the Saifedean videos.
Did you read the Bitcoin Standard?
I read the Bitcoin Standard. Actually, in November of this year, I brought out Saifedean and Moose and his wife, and Saif spoke for 30 of our families plus industry reps, and then we had a crypto carnivore dinner afterwards for 30 people. 24-ounce sous vide porterhouse steaks for everybody. Yeah, it was, and he loved it, because Saif doesn't eat.
No, there's a big it's almost a culture among some of the Bitcoin maximalists, people who only invest and believe in Bitcoin, is that you should only eat carnivore, as in meat only, for your food intake. So there's always like steak dinners, meat. Yeah. One Bitcoiner's meet. So you met with Saifedean, but then but
that was at the end. So 2018 started the reading. I noticed from initial glance that George Soros, his family office, was looking at making investments into the space, and I went, okay, if Soros is there, obviously things like Fidelity Digital was in the space. And given that I'm the head of a very successful Canadian family office, actually North American family office, I can almost phone up anybody or send an email and say, hey, let's meet. So what I wanted to do is to meet people face to face, spend some time. Sent an email to Fidelity Digital, said, you guys have been in this since 2014. Can I spend a couple hours with you? Will you sit down with me? And maybe we can do a custody deal or something. So they took me up on it. I went to Boston and I went, well, who else is in Boston? Well, there's a fantastic writer, one of the top thought leaders, Nick Carter, who's the co-founder along with Matt Walsh at Castle Island Ventures. Set up a meeting with him and Matt, sat down, got their take on the space. They're both ex-Fidelity as well. And that really started the process. And it was, speaking to people like Tor Deemster, speaking to people like Travis Kling, meeting Jimmy Song at the Calgary Stampede at a Bitcoin meetup put on by Francis and Dave. And, that really started to round my views on it.
Did you become a Bitcoin maximalist after talking to all these maximalists? And
again, I think it helped make a decision on what's a store of value. What do you want to be the potential for digital gold? And then what's a VC play? So it allowed me to differentiate between the two and which bucket, investment bucket we should look at for what asset class.
Can you talk a little bit about that? Because I know earlier you kind of mentioned, you guys do different types of investments and have access to different types of investments. So what's the difference between something like a VC play and maybe like a reserve asset?
Well, one's obviously, so Bitcoin obviously has intrinsic value, or monetary value, I should say. Whereas most investments are intrinsic value. So you say, I put $1 in today. What is that business going to generate, and what am I going to get back? Give me my RRR. So capital out, and then it comes back to you. And really, 1 ounce of gold is 1 ounce of gold. 1 ounce, 1 Bitcoin is 1 Bitcoin. It's a very different concept. And ultra high net worth families do own things like artwork. They do own things like exotic cars. They do own things like rare jewelry and fine art. So the Bitcoin made a lot of sense to be able to add that to that category. But once we did that dive, there was so much more upside. And I think one of the ones that really opened my eyes to the asymmetric payoff return was Mark Yusko. Obviously, because I got to meet with him a few times, and as well as the next year at SALT in 2019, was this guy sends me a personal message and says, let's meet up for an hour. And it's a guy named Dan Moorhead. And I wasn't really aware of who Dan Moorhead was at the time. And I thought, and I originally canceled the meeting. And then I'm reading this interview with Yusko, and he's like, oh my God, Dan's a friend of mine. He's a former Tiger Cub. He was head of trading for Julian Robertson. He's the guy that went over to Russia and arbitraged the preferred stock after perestroika. And I went, and by the way, he's got the #1 hedge fund in the world. It's up 140 times your money since 2013.
Wow.
And I went, okay, let's meet this guy. So my head of research, Victor, and Grant, who works with us as well, the three of us met up and we spent an hour with Dan Moorhead one-on-one in Vegas. And he's like, you're the only two people that met with me. There was another firm and you guys. And there's 2,000 people there and nobody wanted to meet with Moorhead. So I was very fortunate. I got invited to the AGM later on in San Fran. And of course, Yusko's there. You've got people like Nick Szabo's there who wrote Shelling Out, who was the founder of BitGold. And it was just I started to see the financial side of it as well, right?
So it was asymmetric risk. For those viewers that maybe don't know what you mean by that, can you elaborate a little bit?
The return upside is either very high in multiples or unlimited in potential. So at the Safedine dinner, a gentleman named Greg Foss was there, who's a former trader for TD. He brought in the junk bond market into Canada. And he was talking to a lady. He also worked in the credit markets. And he goes, how about, he says, you're concerned about Bitcoin. And she says, yes, I am. He goes, how about I give you 90% odds it goes to zero? And she goes, okay, that makes me comfortable. 9 out of 10, it doesn't work. Because everybody hears about these great returns. And he goes, but I think it's got a 10% chance it goes to $1 million.
Okay.
And if you do the math, so 10% of $1 million, he says that gives it an intrinsic value of 100,000. And today it's not at 100,000. So I think it can go up 10x, even with the chance of it going to zero. And that's a kind of trade that traders would make all day long. It's hard to find those types. Usually I think I can get a double at where I can lose 50%. But given the fundamentals around Bitcoin, given you've got firms like Microsoft building identity layers over top of it, and all that architecture being built around it, I think you've got more market risk, the day-to-day volatility in price.
Yeah.
But I think the fundamental risk is a lot lower, and it's probably lower than a firm like Apple was in 2003. And I think we all wish we bought a lot of Apple stock in 2003.
Yeah, I did. I'm a spring chicken here. I was in high school then, and I did a project in econ, and I knew, I was like, oh man, I knew you do like the fake stocks, and I was like, if I was a kid, I was like, if I had $1,000, I would put it in Apple. Everyone thought I was stupid, and so we knew, some of us maybe no, but actually, what's really interesting, I hear you saying, Arthur, is that risk is sometimes a good thing, which is not necessarily intuitive to the non-investor, maybe the traditional hodler, as they call it, like the Bitcoin person that doesn't have their own family office. They might be a little confused why risk would be good. So what do they do? What do they do to to offset that? That makes it really
great question. So I was actually mentored by a gentleman named George Fraser. And when I was hired to work at his firm back in 2002, after a 12-year period at TD, when I was doing research on the firm, George had a track record of buying Canadian stocks, dividend stocks, and beating the market over 1 year, 3 year, 5 year, 10 year, 20 year, 30 year, 40 year, 50 year, 60 years. Okay. And he beat it by 2% a year. And the volatility, the amount of movement day to day in the portfolio was 2/3 that of the stock market. So all in equities, but less roller coaster.
Okay.
And most people that listened to him, they said, "Oh, it's because he invested in dividend stocks." But dividend stocks didn't outperform over those periods of time. Like sometimes they do better, sometimes other areas do. But dividend stocks don't give you the extra rate of return to cover your fees and give you performance. Now, George was dyslexic and left-handed, but brilliant. And he would buy things called a heartbeat. He says, this are things that are part of your portfolio that will make your heart race, make you feel alive.
The flinch.
Right.
So
in CFA speak, we call that opportunistic investing. Okay. So you need an opportunistic bucket in your portfolio to drive alpha, which means something that has risk in it. And you want something that can go up a multitude of times, and that if it doesn't work, probably won't kill you. So having an allocation 1, 2, 3, 5% of something that can go up 10x, 20x, 100x, and it can only lose 5% of your portfolio, which is not enough to destroy your life savings, is something that you do want to look at periodically. And that doesn't mean all the time, but once you've done the work, if you've got that edge, you want to make that decision and make that call and pull that trigger.
So edge is kind of like a mix of knowledge and having enough money that you wouldn't end your life, but also you could grow it a lot and get a higher return than someone. Let's say they only had $10,000. Risk may. It sounds like, again, this is a larger scale than maybe some people listen. So like putting 3% as something high risk has less of a reward maybe if you have less money, or is it still kind of the same thing?
As long as you're not going to spend the money. So if that $10,000 of savings is meant for your retirement 50 years from now, 40 years from now, it's easy. If it's to buy a car in 12 months, 6 months, 2 years, you probably don't want risk assets.
Can you talk about how much you allocate towards Bitcoin for your clients? Or
our average family, we allocated 5%, which is massive. So when people say get off zero, we went hard, and it's because I think we know where we are in the cycle after the halving. We've got a 50% dynamic rebalance around it for risk control. So if the price declines, so a 5% allocation, a 50% move downwards means it goes to 2.5% of the portfolio. We would add Bitcoin and buy it back up to 5%. If Bitcoin goes to 7.5% of an allocation to a portfolio, we would sell it and bring it back down to 5%. So that way the position size doesn't get too large relative to the overall portfolio. It's called a dynamic rebalance. Now,
so to clarify, that like as Bitcoin becomes more valuable, you'll reduce the overall because you make
to buy lower risk assets.
Okay. So that's interesting to say that like you're making so much money that you want to keep your risk about the same and you siphon it off.
If you have an asset that goes from 5% to 50% of the portfolio, and we know that the volatility of Bitcoin is 4 to 5 times that of stocks.
Okay.
You could have an investment portfolio that went from something that was like watching paint dry to something that's probably less volatile than or almost as volatile as an F1 car. That's not what people want. If for your own PA, and you don't have a fiduciary responsibility to them, we've got a fiduciary responsibility to our families. We would manage that risk. But for your own PA, if you want to hang on to it and let it run, that's your own decision. But when you're hired and you're paid money by people, you also have to protect their capital.
So Arthur,
is
the majority of what you do is protecting capital and fiduciary, doing that fiduciary duty, or do you have other value adds as a family office?
So we're always a fiduciary. So like your lawyer, your family lawyer, or your family accountant, they have to put your needs, the family's needs first and foremost over anything else. And conflicts of interest, you don't want them. You just want to remove them completely from the picture. So it's the families that we deal with are already wealthy, very wealthy, and they want to stay really wealthy. But we have problems like taxes. We have problems like inflation, those challenges. So to keep a family wealthy, you have to overcome the hurdles of taxation. You have to overcome inflation, as well as additional new family members being created. So new family members can marry into the family. New family members can be born into the family or adopted. And if that wealth doesn't grow enough to offset those increasing numbers, then the family gets less wealthy per person.
So what is the overall goal of a family office?
What it should be is really to cater to the unique needs of each individual family.
Okay.
Most of the families have longevity requirements. And there's a saying that shirt sleeves to shirt sleeves in 3 generations.
Okay.
Or rice paddies to rice paddies, or stalls to stables to stalls again. There is a 70% chance that through each generation, that wealth does not transition to the next generation. So, and that happens every time. So if you're down to 30% after the first generation, you take 70% off of that again. Now you're down to 10 from second to third, and you're at 97% chance of failure by the 4th.
So why would they fail? Like what happens?
Usually it's human communication.
Okay.
That's you can put all your monies into 0% yielding GICs or government bonds, and you'll slowly go broke over time.
Okay.
If your family goes and has a barbecue once a year, a family reunion, you get along, there's a high probability the next generation will be wealthier than the generation today, either emotionally or financially or a combination thereof. But when enough family members, when there's a large liquidity event and everybody gets FU money, the real FU money, the cohesion drops because you don't need to work with other family members towards a common goal. You got your own, maybe yours and your spouse, maybe yours individually as the next generation. But you say, I'm going to do it my way because I don't have to listen to you. I've got enough of my own money to do it.
Okay.
And that is that's always a challenge, regardless of the family. And successful families.
The Lambo, the wife buys 5 homes.
Yeah. Okay, so
Right.
it's almost
or
like
you lend your money to your buddy who's going to do a restaurant right before COVID.
Okay.
All sorts of silly things like that, right? Because you thought you could make more money on some special deal where you don't know.
Okay.
Yeah, so I'm not making advice here or shilling for any type of investment style, but what it sounds like is that in that scenario you described, if grandpa had a family office that the children inherited like through that, and there was continuity of shared assets, it would decrease the likelihood that like the money would splinter and then be
exactly. And there's
so it's like,
and there's an education process to it. So let's say somebody wanted to be the best marine biologist in the world. That was their passion, or they wanted to be to study physics. You also have to be a responsible owner of those assets.
Okay.
So you can pursue your passion. That's important. That's what you want. And you've got the financial means to do so. But how do you know that your family office is doing the right job? How do you know the managers are doing the correct job? So the onus comes back to you on being a good owner of those assets. And there's, for every right and freedom, there's also a responsibility attached. And if you give up that responsibility, it's more likely than not that your rights and freedoms will disappear.
So it's almost like a mindset. It was like you inherit the money versus you own it, and they mean the same thing. But it sounds like if you never take it for granted, you can. Someone like you would then, or your firm would be maintaining it or you'd switch to a different firm or whatever because.
And we'll bring in educators, we'll bring in consultants. Part of long-term family wealth is differentiating the family's wealth from your own personal wealth.
Okay.
How does that work? What does that mean?
Well, there might be family assets that are in a company, that are in a trust. Maybe you've got your own house, your own car. Those are your assets. But if you start thinking that your family's assets are yours, it's very easy to get on the wrong path too quickly. Okay. It's like people that win the lottery and they say, I've always wanted this dream vacation. I wanted to do hot air ballooning over the Serengeti with champagne at sunrise. Fantastic. So they do that once in a lifetime journey. And you know what happens? The next year they say, well, we went to Africa last year and we did that. So what are we going to do this year for $100,000? Okay. And it becomes an annual event.
Yeah.
As opposed to once in a lifetime, which means you never do it again, and hopefully you get to Disney 10 years from now. That becomes the challenge, and too many people get caught up. It's if you go work at a bank and you're the teller or even the bank manager, and you think those bank deposits are yours, you're going to jail, baby. And when I started in banking in 91. Like when I started banking in 91, the previous bank manager thought the bank's money was his money and he lent money to his friends. Ooh. And then his friends couldn't pay him back. And then he had to write loans and cover them up to cover the losses from the previous ones. And it's just it's a bad negative feedback loop. So the trick is your money's your money, the bank's money is the bank's money, and you are there to represent the bank. And that's another good step too, is successful families will look at setting up things like family banks.
Okay.
And I think maybe having something, a family bank is a pool of capital that successful families keep aside for the next generation of entrepreneurs.
Okay.
To get a leg up in the world.
So are they lending too? It's not just
they lend to family.
Okay.
So one of the top families to do this and employ it is the Rothschilds.
Okay.
And if you look at the Rothschilds, I mean, they developed their wealth in the 1700s, and they went through the French Revolution, they went through World War I, they went through the Holocaust, and they still have wealth. And part of growing up into that family is the name, obviously, and the connections, but they just don't say, here's $1 billion, go have fun. Coming from a successful family, a wealthy family, if I went to the bank when I was 20 years old or 22 and I say, I've got an idea for a business, and you know what the bank would say? Do you have any capital? You don't have any experience, get lost, kid. But as a Rothschild, you go to the family bank and you say, I want to create a financial business because that's what we're good at. I want to use all our connections. I want to borrow money from my family trust. And the overseers of the family bank say yay or nay. They put interest conditions on it, all the terms and conditions, and you get that loan to help grow your business and start something. And that financial leg up is enough to keep you wealthy and get you rich again.
Okay.
If you just want to coast on your couple $100,000 a year, then that's all you're going to do. But if you want billions, borrow the money, become an entrepreneur, and don't lose it. Because if you lose it, you're not getting any more money.
In the chat, Katrina has a great point. She said that to me, what you're trying to say is that, Arthur, is that family offices protect legacies. That sounds like a lot of responsibility. And then you took it that next level with the banks. Like, so are these family banks, like from a legal perspective, like regulated the same way other banks are?
No, they're private because you're only lending to your family.
Okay, but do they have some of the same laws, or like how are they structured? It doesn't
in the US. In the US, in Canada too, but in the US, if you have $5 million, you can create your own bank. In Canada, if you want your own trust company, you put $5 million aside as a reserve, and you've got a Canadian licensed trust co. So you can do it informally through your family, but a lot of people that have capital will register their own entity for some way to be able to leverage assets even further through the financial system. That's against what Bitcoin's about. So I'm not recommending that.
You are your own bank in some ways. I have a question.
You are,
Do you actually, do your clients, so you put in about 5% of their wealth into Bitcoin, do they also hold their own Bitcoin, or are you just buying?
We educate them to do that, and typically, because we don't want failures, we do recommend firms like Casa Keys. Because I think multi-sig is a great way to do it. Maybe some of the maximalists don't think that's the perfect way, but I think it's probably 99%
error proof.
Yeah, very, very much so. Especially like 3 of 5. It makes a lot of sense. This is a VC investment that Castle Island has made, by the way. So so Nick and Matt have capital in with Casa. I think it's a great product for people that don't. Right? Pardon?
They are a custodian, a Bitcoin custodian.
God, no. They help you manage your keys. No, not your keys, not your Bitcoin. No. This is run by Jameson Lopp. A real maximalist. So no, it's almost perfect. It almost meets everything that most people want.
Yeah, financial. You are your own bank, but in a way that someone can't, just steal your keys. So that's, you mentioned multi-sig, meaning multi-signature, as in multiple signatures are needed to access.
And if you're going to keep real wealth, the biggest risk is single signature keys. It's nice to have air gap computers and all those things, but something happens to one computer, and all of a sudden, how do you get your how do you get access back? Now you were talking about banking. Now, I ran into a problem in September, pardon me. The overnight lending rate, it's called the repo market, backed up in September. Banks didn't want to lend to banks overnight. And the interest rate went from 2% annualized to over 10% annualized in a day.
Wow.
We had sent almost $1 million wire to fund a private equity vehicle in Europe. And this wire went through a French bank, and the French bank held the wire. So we said, why is the wire held? Well, we want more anti-money laundering, know your client information. So the wire came from a Canadian bank, which was fully AML'd. We said, here's all the additional information. Within 36 hours, we provided it to them. How long did this French bank hold this $1 million wire for?
How long?
And we kept saying, can you put it forward or can you send it back? And they wouldn't do it. They held it for 30 days.
Oh my God. So you're missing out on this investment for 30 days?
30 days, they wouldn't send the money forward, nor they would send it back. And every email to this French bank, I said, I could have done this in less than 10 minutes using Bitcoin.
Yeah.
Constantly to them in my email.
So they made money off of it instead of.
Well, the problem was I think they had a working capital problem. They needed the additional cash, and they were slowing down wires, so they had more cash on their balance sheet.
Oh no!
When the repo market backed up, right? And I'm like, is there a financial problem? And now you hear about it, that they did have financial problems, but that's what went on. They wanted the cash more than they thought it was the customer's cash.
Wow.
The nice thing with Bitcoin is you know exactly how much you have at any given point.
Right. And that's the problem with it.
Yeah. Okay. Exactly.
And that's the challenge with this legacy banking system. And I think firms, like Square, you've got PayPal now doing it. I think people and corporations will go around the SWIFT, the SWIFT in the US banking system to get stuff done. It's way easier to send store value around the world using Bitcoin than the current wire system.
That's unbelievable.
Kay says that's like being held up. Like I got that point.
Yeah, no, that's like short-term theft. but it makes sense why they were able to do that because
it doesn't make sense. They're called
they don't have any assets.
They're called banksters for a reason.
Yeah.
Highway robbery. That's right.
It's funny. It's funny that you tell that story because I remember last year, like money just dried up. You'd be working with a client, they'd be raising money. We do some startup advising for early stage stuff, and they're getting money. All of a sudden, they're like, nobody will send me money, and I'm just like, okay. And everybody this year is like, that didn't happen. There was no money problems. I didn't know what was causing liquidity issues.
It started in September, and it had nothing to do with COVID. It had nothing to do with any of this. There was a breakdown in the credit markets. Yeah, and people don't want to discuss it.
Yeah, but again, because he was a former Wall Street banker, so he had the right connections, and they were like, he sat down one day, there's money, and he's like, there's no money that exists in the entire city of New York, but liquidity and repo markets would make sense. So, and there were, we want to talk about repo this year, but that happened again this year, right, with repo after COVID, that there was issues.
The whole system just froze. It was it was a mess. I think the lockdowns were wrong. Saying not to use masks in January, February, March was the wrong thing. We probably should have used masks back then, but mandatory masks, I think, are overkill. The response due to the lockdowns, the 2.5 months of lockdowns, are overkill. The Canadian monetary system, the money supply during the 30s and early 40s, so Great Depression, Second World War, increased by 100% in 10 years. In the last 4 months, they've increased it 5x by 500%. Yeah. We just added more than 50% total debt to our balance sheet in 4 months.
Go burr.
Yeah, right? and I think, realistically, that this next decade, I think it's the highest probability of stagflation that we've seen since the 70s.
Can you clarify for viewers what stagflation is?
That means no growth and prices go up.
Okay.
Mm.
Okay.
It's not good.
So you have to mitigate against that, right? And you have to use tools and assets at your disposal to mitigate.
And again, we've got access to every institutional grade asset manager in the world at Northland. Mm-hmm. And I think one of the best ways, if not the best way, for a very wealthy family, for a non-wealthy family to buy financial protection insurance is probably the use of Bitcoin.
Yeah.
That's where I was getting at too, is Mags, right? The US. It's like, so it sounds like in a situation where government policy, agree or not, you're at the will, if you're extremely wealthy, just like everybody else, you're at the will of the financial system, which is based on these kind of like shady moving pieces that, like, if you stop them for a day, all money gets frozen, right?
Mm-hmm.
And that Bitcoin having, if you have, let's say, $1 billion and you can't access 95% of it, having 5% of it in Bitcoin could, be really essential. I mean, all of a sudden you can't pay your bills because your money's not stored in a traditional bank that's FDIC insured. It's stored in an asset that the French government, this French bank, for example, is holding.
Right.
And
that's what happened with the Rothschilds. When you look at their history, it was because they held assets outside of the country that they were residing in that gave them enough capital that when things went bad, they could start over. And they could do that because they were wealthy at the time to be able to set up trusts or buy assets in other jurisdictions. Bitcoin allows you to do that regardless of where you're born in the world. Mm-hmm. You can go in with a hot wallet, memorize your keys, throw your phone away. If you get out of Venezuela, Cuba, China, Korea, you show up in another country, you put in your code, and now you've got access to your wealth again. Mm-hmm. That is what the Rothschilds had, hundreds of years ago. And every person now, almost every person has that access. It's incredible.
Hey, Arthur, sorry, go ahead. You told me a really interesting story last week about the Crusades and what you feel might be happening right now. I'd love if you could tell the viewers about
part of, and again, it goes back to Soros. George Soros is probably the world's best speculator. Mm-hmm. And the reason he's the world's best speculator is he has the ability to spot bubbles. He made $1 billion within a week, overnight, basically, speculating against the British pound back in the late 80s, early 90s. He broke the Bank of England, literally.
How did he do that?
He, the Bank of England had a fixed peg between the British pound and the US dollar. And he thought that they were going to have to break the peg. So he bought a lot of options on the short side, saying that the price was going to go down. And he sold it short, putting pressure on. Other speculators, other investors said, look what Soros is doing, and let's follow. And that became an overwhelming flow to push. So understanding not just investing, but how markets move, you need to understand human psychology. So one of the best books, it's about stock market bubbles and manias. And the best story that I ever read was on the Crusades. Okay. And you say, what are the Crusades famous for? And what they're famous for is causing the first depression in Europe. And what happened originally was, Richard the Lionheart's over trying to take back the Holy Land for whatever reason, right or wrong, probably wrong. And people went along and said, yeah, we're going to help you do it. And everybody laughed. Why would you want to go to the Holy Land and reclaim it for Christianity? That's crazy. Yeah. And some more people went, and then more people went, and it went from ridicule to acceptance to enactment.
That sounds familiar, kind of like Bitcoin, eh?
Well, that's the point. So people had to sell their property, sell their assets, sell their grain. The price went down. The next year, more people went. They sold again. Price went down. Yeah. Until there was nobody left to buy, and that also works on the other side. Or you can say it with currency. Like, I want to sell some of my fiat currency. I want to get rid of some of my CAD. I want to get rid of some of my USD. Maybe even want to get rid of a little bit of my gold. And what do you want to buy? I want to buy this digital asset. Oh, that's crazy. But but slowly, when people start to do it, it becomes a wave over time. Now, there will be, if you look at the Bitcoin price chart, we've had, 4 cycles with, major, manias take place.
Yeah.
But we've had, we've had higher lows and higher highs. But you probably, if our price goes up 100% in a week, you may want to take some money off the table. It makes hodling a lot easier if you take away some of your spending money at the peaks. You want to repurchase it again. Don't get too cute, but it does. The market does go vertical. So we knew that ahead of time by doing our research. So we do have plans that there's standing orders if Bitcoin goes up 100% in a week to definitely scale back substantially.
Could part of that plan be to send a lonely consultant in Chicago, something like that? Even like a fraction of a percent, I would take. But you don't have to send me money first. It's not a scam. It's just charity.
Yeah. Well, that's just put your public wallet up there and.
Dave, that's not what we're here for.
I know, I'm kidding. Please don't. I don't need to.
But I think it's a good point, and it kind of brings us back to, what we started with is, we have MicroStrategy finally throwing their weight in, but before that, legendary investor Paul Tudor Jones came in, strongly into Bitcoin. And
do you have his video? Can you find his video quickly?
Sorry. Paul Tudor Jones?
Yes. So it was Paul Tudor Jones, PBS. He did a video back in the 80s, before the crash would have been 86. It only aired once. And because he was so cocky in it, he bought the rights to it so that it wouldn't air. And people kept throwing bootlegs up. And now it runs. But if you can find, yes, that's it. You gotta watch it. It's a phenomenal video. Anybody I hire, I make them spend their first hour watching this.
Well, and then now, so we've got these legendary investors, and then at the same time, what's happening, especially this week, there has been a giant push towards Bitcoin and digital currencies. For example, there's been a Galaxy ad here. Galaxy Digital, Financial Times. Let me pop
and I was lucky enough to have lunch with Mike Novogratz and meet up with the Galaxy team, as well in New York a few times at their head office. Met the Grayscale team as well. But yeah, Galaxy's really it's a single family office of Mike Novogratz that has scaled out to offer investments, to the world.
So and then we've got. I just maybe we'll end it with maybe your take on what you think about this commercial. Am I sharing voice by? Just a quick question.
Are you sharing what?
The volume.
Yeah, I can hear it.
Yeah, we can hear a little bit. We can't understand what he's saying, but we hear the music.
They're basically.
Unlimited amounts of money as they pass the buck to the future.
Drop the link in the chat.
Talking about how we're printing money
in the Grayscale fund,
and we have to transition because we went from shells to digital money, right? So,
they basically took Nick Szabo's shelling out, and then ran a Ramones song from the 80s over top of it. So unless you're 45 or older, you probably don't know that song. But I think when you look at you look at Grayscale, the age of the founder's probably in that right spot. So he's trying to sell this to his friends. This isn't a way to go after millennials. Millennials already get it. But how do you get people? How do you get people 45 and older to put some of their capital? Yeah, like they got the Ramones going, right? Like
they're like, what is this? I want real gold. I want to be able to bite into it.
Yeah, maybe put one in your teeth. I'll tell you, if Kanye West adopts it and they have like the open dime for his tooth, like if you can have an open dime, maybe it'll get popular. Yeah.
Bearer instrument, Bitcoin bearer instrument. That's great. Well, we're at about an hour mark, so I just wanted to say thank you, Arthur, for your time. I think we learned a lot. It was really fascinating.
That was a lot of fun.
Into the world of family offices. Everyone, thank you for watching and putting some comments in. We really enjoy when we're able to engage with you guys. You know, we're having a lot of fun. We're going to do another live stream next week, and any kind of closing thoughts on what you think, Arthur, you know, kind of where we're headed when companies, for example, like Microstrategy are coming in, like where do you see all this going in like 5 years or even shorter?
I think they're the wedge that I always look for. MicroStrategy is the wedge. Other firms will follow. It might be the next market cycle before that happens, but the infrastructure that's being built, you know, by ErisX, Back, Square, Microsoft. I mean, this is Apple 03, 04. It's something that you want to get familiar with, spend the time on, and definitely look at it as an asset class. You know, to be added to a 60/40 portfolio.
Yeah. And there's only so many companies that can add 0.1%. Sorry, I said 1% before, for like MicroStrategy to their portfolio, and that's it.
Yeah, there's you know, there's more millionaires than there are Bitcoin, so
there you go.
It's pretty easy to figure out.
Awesome. Well, thanks everyone. See you guys next week. There's information about Arthur in the details below. Check him out, and have a great day, everyone. I'm ending this broadcast.
Thanks, David, Max.
Yeah.
Thanks. Bye.
Bye.